Hello and welcome. You have tuned into Buy Now Sell Now on ET Now. I'm Srishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock related queries. In a short while from now, we will open the stage to get all your stock related queries answered by our experts. But before that, let's have a look at what the markets are up to. So Cheryl, first day of the week and a fresh high on Nifty 15 deal.
Absolutely, Shrishti, and your voice also is actually kind of resounding that sort of a move coming in. The markets pretty perked up on a Monday morning, just like the way how the benchmark indices are today. If you look at the benchmark indices, actually screen is talking for itself. Fresh record high levels. You had Nifty that surpassed 20,600 mark. You have also Sensex that surpassed that 68,000 mark as well. You have Nifty Bank that is actually shy of those record high levels. Nevertheless, it is seeing an uptick of about 2%. You have the broader markets that hit a fresh record high levels. So yes, a great day going in for the benchmark indices, and this is on back of the state election verdict that you've got. Actually, the ruling party has fared much better than what the exit polls had also indicated. So sweeping 3 states out of 4. So that's a big push coming in for actually continuity of the policies, and that's one of the reasons why you have the benchmark indices performing exceedingly well in today's trading session. Now, since you've seen actually the initial ticks actually settle in, we had opened with a gap up. You saw all the Nifty stocks actually in the positive territory, but now some of them have actually shifted to the negative territory, and that's Britannia, HDFC Life, Maruti Suzuki are some of the losers in today's trading session. While on the flip side, the Adani Group stocks, they are seeing a rip-roaring rally today as well. Adani Enterprises, Adani Ports, be it Adani Power, Adani Total Gas, all of them are seeing sharp up move in trade today. So for Adani Enterprises, Adani Ports are the top gainers on the Nifty, followed by BPCL, ONGC, L&T as well as SBI. All of them are seeing strong gains in today's trading session. Talking about the sectoral indices, and all the sectors are in the positive territory, barring actually pharma index as well as media index is now in the negative territory. A sharp downtick coming in for Z Enterprises as well. So that's weighing heavy on the media index. But on the sectoral front is the PSU Bank index, that's the top gainer. And yes, you have the PSU counters also, the top gainers, and that all can be actually attributed to one single reason, isn't it, Srishti? The fact that out of 4 state elections, you have BJP sweeping 3 states.
Well, yes, that's the big headline, and definitely market are too in the cheerful mood. But the big question is that given the verdict and given the given the Lok Sabha elections in the times ahead, which are the sectors that you need to be watching out for? What does it mean for the market? On that, we have the editor's take. Nikunj Dalmia, managing editor, ET Now, talks about how BJP's sweeping victory will impact the market. Let's revisit his take.
In the run-up to the election, whether it is 2019, 2014 or even beyond that, markets, they tend to rally. I think that is something which is on our side, and that is how markets have moved prior to the election, 2019, 2024, 2019. So like they say that history may not repeat itself, but it certainly rhymes, and looks like this time it's no different. But the difference what may actually happen post the state election verdict is, first let's understand what it means. It clearly means that this is an endorsement by the voter for continuity, and it is also an endorsement for what the A, continuity in states where BJP has come back to power, and B, endorsement by the voter in states where BJP manifesto in a sense has gone down very well. So from a real voter standpoint, this is just an endorsement of the policy of the current administration, even at the state level. Now from a market standpoint, well, the general view post the exit poll on Friday was it would not be a hat-trick for BJP. At best, it could be a 2 out of 4 states. But since it's in hat-trick, that is something which markets now would like to start pricing in. Now, in the run-up to the state election also, irrespective of the state election, markets had hit an all-time high. And that was nothing to do with the local cues. It was always a global rally which in a sense was at play at least in the month of November. Starting from US equities to the kind of rally we've seen in Bitcoin, the comeback in gold and silver. So it was a rising tide phenomenon which in a sense has been at play from last 4 to 5 weeks. Now, are we likely to differentiate ourselves? And I think we will differentiate ourselves because of the local tailwind and post the state election. So, are we in for a bout of outperformance at a time when globally as it is markets are looking strong? So, it really could be a twin engine benefit. The market, globally there is a strong tailwind. B, locally there is a propeller effect which would kick in. So I think it's going to be a twin gain for the market per se. What you may actually see, Aisha, is that you may see decisive move coming into large cap stocks.
All right, so that's the view coming in from ET Now, and ET Now Swadesh's managing editor Nikunj Dalmia. But let's hear out Swaminathan Iyer, who's the consulting editor at ET Now, talk about the impact of BJP's win in the 3 states, and also he's emphasized what does this indicate for the global investors.
Global investors are not particularly interested in the state elections. They look at the larger picture. I think they've already assumed that Mr. Modi is going to win in 2024. This is some confirmation of what they were going to do, but I don't think it changes their view that Modi is going to win in 2024. And whether he wins by another 10 votes or another 10 less votes, I don't think is the key. But yes, the markets like continuity. Particularly, I think they would have been worried if there was a Congress sweep. Then I think something like the Adani shares might have had a question mark against them. Because of certain fears. I would certainly expect significant flows to be coming in 2024. However, as far as FDI is concerned, we still don't see a huge inflow. I don't think the foreign investors are that keen on PLI.
But is this a time to shift 15 to 20% of your allocation from the mid and small cap to the large caps? Let's listen into what Sanjeev Bhasin, director at IIFL Securities, and market experts like Naresh Mirani and Kunal Bothra had to say on this.
No, I would continue to remain stock specific and not go towards large caps. Keep continuing the same allocation as you were say yesterday.
Well, yeah, I think it makes sense to shift from mid caps and small caps towards large caps. That's what I would believe that the next leg of beta as well as price performance could be.
Not 15, 20, 25 to 30%, 100%. Take money off the table. There is room on the upside in Kotak Bank and the whole banking scenario on the communication side and on the large cap. There is profit booking. It will come in mid caps because there is been froth over there, and it's always good to leave something on the table. Let the next person make money. If you have made good money, that's the time you should encash your profit. I am very, very confident on the large caps, and I think their underperformance will now come to the shelf. Plus, if you have large inflows from foreigners, it will be always on the index stocks firstly.
All right, so that's the view coming in from market experts as well, and as to what should you do and how should you allocate your funds when it comes to investing in the equity markets. And most of them have actually advised the fact that now you should shift from the broader markets onto large cap territory. In fact, we also spoke to Saurav Mukherjee, who also said that as a domestic investor, he'd rather actually put his money now into the large caps and move out of the broader markets. But do our experts concur with it? Yes, we've heard Kunal Bothra's views, but let's bring on board Mr. Chokkalingam as well and Kunal as well. Very good morning, both of you, both of gentlemen. Thank you so much for joining us on Buy Now Sell Now. Mr. Chokkalingam, let me come to you. We've heard actually 3 of the voices out of 4 who've actually said that it makes sense to actually shift your money now from the broader markets to the large caps right now. But do you think this is the only theme that will be at play, given the fact that we've seen spectacular results coming in for state elections, 3 out of 4 swept by the BJP? You've seen what the markets are doing. So now where do you think the focus will be? Which themes are likely to move? Because we've already seen the PSU rally play out, isn't it?
Yes. To be very short, election results, all of us know it's a positive. And the global cues are positive. Oil price corrected. Of course, today it has gone up, but still it is down from 1 month high. And world over, everybody is convinced that interest rate cycle is now done. On domestic front, these election results have given boost. Now, coming back to the specific question of small and mid cap, I would like to say that never zero small and mid cap. One should talk about only tilting towards large cap or small and mid cap. Now, this is a time to tilt towards large cap and large mid cap, but one shouldn't zero it. I would say that at least even 30-35% of the equity asset class should be in small cap, and that is going to be the wealth creating story. And phenomenal wealth has been created from 2014. But certainly, time has come to be very, very cautious about the small cap. Absolute valuations are stretched. The relative valuation over index stocks like Sensex Nifty, that is also stretched. There are micro companies which have got a governance issue, inferior quality of the balance sheet. They are trading at abnormal valuation. Other than Sensex Nifty, if you look at the trailing PE or 1 year forward PE, there's a lot of scope for improvement. So therefore, I would say that for a conservative investor, 30% in the small and mid cap quality stocks, the balance money should be put in large mid cap and large caps like Sensex and Nifty. To be very precise, the one should play on theme like automobile. If oil price falls, oil companies, tire companies and logistic companies like Blue Dart. If oil price zooms, then one should buy companies like Oil India, and then automobile, and then banking will be a still great play. The credit growth is still around 15%. Then individual stocks like Reliance Industry, Zydus Life Sciences. These are our strong recommendation. The next bull run will happen in these large cap stocks.
Thank you so much, Mr. Chokalingam, for telling us how the portfolio allocation could be at this point in time, and the stock and the sectors that you like continues to be bullish on the banking and the automobile space. But Kunal, any sector that is on your radar, given the state elections verdict and the assembly elections in the times ahead, any theme that you feel that could be great to watch out for? Any investment ideas there?
So, good morning first of all. There are quite a few themes, and I think it makes a lot of sense to look out for the PSU basket even from current levels. Now, a classic example is what happened to PFC REC from the point when these stocks were, I think, 150, 75 odd mark. From there, the move started off, and these stocks at 250 looked overbought, 300 also looked overbought, and now these stocks are perched almost at 375, 400 odd levels for themselves. So that indicates that the momentum for these stocks is not short-lived, and what we are looking out for is possibly a major multi-year start of a major multi-year uptrend. I would believe that would be the case for many of the other PSU sectors individually, whether it's the likes of large cap teams like Coal India, NTPC, ONGC, GAIL, or whether it's the mid cap front, something which I mentioned earlier. Even the PSU banking lot, I think, looks fairly attractive to me at current levels, and I believe strongly that many of the PSU banking stocks could as well as should perform exceptionally well going forward. So that's one pocket to look out for. And of course, the railway stocks, the defense theme fairly looks attractive. So many of the sectors which are looking attractive, but majorly if you look at the overall holistic basket, then it's PSUs which should probably try and shine and outperform.
All right, so Kunal is of the view that there is still scope for PSUs to shine brighter and actually outperform going ahead as well. But as we slip into a break, right now on this edition of Buy Now, Sell Now, ET Now, Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. So join ET Now, Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And viewers, it's an easy process, and you know that you have to write to us on a WhatsApp number that is flashing on the top of your screen. And you can also write to us on our Facebook as well as Twitter pages. But with this, let me welcome once again on board Kunal Bothra on the technical side, as well as Mr. Chokalingam on the fundamental side to guide you better. And starting the first query with this one is on Voltas, and let me take it from you, Kunal. So Darshana from Bangalore is holding 100 shares from a price of 997 rupees. Good to hold or move out of this particular stock at a loss? And she also has 300 shares of Biocon. Buy price very high at 454 rupees. What to do in this one? Any opportunities to average out?
So both of the stocks, I would expect that these stocks would probably have one more leg of correction which is pending for themselves. So I would suggest to maybe wait out. If you're looking at specifically these two names, then I would believe that possibly in the next 1 month you could probably get an opportunity of averaging these stocks maybe another 6% to 7% on the downside. So broadly 5% lower from current levels is where you could look to start averaging both of these names, Biocon as well as Voltas.
All right, this one is coming from Sudeep. He's writing to us from Mumbai. This one is for you, Mr. Chokalingam. He wants to know whether it's advisable to buy CDSL, CAMS and KFin Tech right now in a staggered manner or in an SIP mode for the next 2 to 3 years.
This is not the right time to buy. The stock has, more than 150% jump, and it is at the peak of the bull run in the entry of new investors that has boosted the fundamentals. But this is not going to continue forever. So it has to peak out and correct. So one should wait for a right time to buy. Retail investors should be always very cautious, and they should do bargain rather than riding on the momentum for long term.
Chokalingam, the next query is coming from Ghosh Tada from Delhi, a regular viewer of ours. He's holding 7,500 shares of Genius Power at a price of 278 rupees. His target for the long term is 350 rupees. Is that, you believe, is on cards? And what to do? What's the outlook in this one?
Genius Power. This stock used to be around 20-30 rupees. And if you look at earning per share for September quarter, 43 paisa, and the stock is trading at 238. I don't know how he has arrived at a long-term target price. I think the long-term target price should be in double digit. And this has happened invariably for this stock in the last 10 years at the end of the bull run.
All right, let's move on and let's actually deviate for a tad bit and let's talk about the CDMO players like Syngene, Gland Pharma as well as Divi's. They all could come or rather be in focus after major global players flagged concern and also talked of the risk of an industry-wide risk or a risk of a slowdown on an industry-wide process. But my colleague Soumit is just to tell us which exactly is that global company, what are they saying and why will it impact the Indian players. Soumit, over to you.
CDMO players like Syngene, Gland Pharma, Divi's Lab and Dishman Carbogenics would remain in focus because Wuxi Biologics, which is a major CDMO player from China, share prices plunged nearly 24% after the company came out with its business update. In fact, trading halted on Wuxi Biologics. Now, what Wuxi Biologics has said is that the industry is facing near-term challenges. They are now expecting a single-digit growth compared to a 15% growth seen in many of the past years by Wuxi Biologics. Now, they are saying that the challenging macroeconomic conditions are also pretty much evident from the global upstream suppliers, which is also leading to this low single-digit growth expectations from Wuxi Biologics. Now, segment-wise, they are saying that in the development service business, the company is expecting a decline of nearly 18 to 20% as against earlier expectations of 23% YOY growth. And when it comes to the manufacturing service business segment, the company is expecting a decline of nearly 15 to 18% as against growth expectations of nearly 12% on a YOY basis. Now, as per AMSEC, whom does it impact? Like going by Wuxi's commentary, industry slowdown may be severe in certain segments. That is what the brokerage house is saying. And they're also saying that the possible slowdown could even extend in FY25. That is for the first half of FY25. And they're also saying that slowdown in manufacturing may impact companies who are operating in development and manufacturing for other US clients. So the companies that would remain in focus as per our analysis are Syngene, Gland Pharma, Divi's Lab and Dishman. So keep an eye out for the CDMO players in trade.
Well, thank you so much, Soumit, for highlighting what's happening with the CDMO space. Wuxi Biologics giving out a cautious outlook and Indian companies that are in focus too. But with this, viewers, it's time to submit to a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell on ET Now, where we get you answers for all of your stock-related queries. Let's continue taking your queries then. And the next query that I have is coming in from Chitra, who's writing to us from Bangalore. And Chitra has bought Tata Steel, about 200 shares at a price of 129.6 rupees per share, Kunal. She wants to know what should she do with this counter. She can hold it for the next 1 year.
I think we should continue to hold on. Looks attractive. In fact, many of the metal stocks are making a comeback. As well as Tata Steel has been one of the stocks which have been highlighting over the last 1 week, specifically with the stock breaking past above the 50-day moving average. I think you should continue to hold on.
Okay, moving on to the next one. And Mr. Chokalingam, what's your advice on Crompton Consumers? Venkatesh is holding 125 shares at a price of 300 rupees. He wants to stay invested for long term, probably for 3 years time horizon.
And hold on to it. Being FMCG and performance has been good in the last 3-5 years. You can hold on to the stock for long term.
Okay, this is a bit of a longish query that is coming in from Sagar, and this one is for you, Mr. Chokalingam, and I'll read it as the way he's actually written. He wants your view on PSU bank stocks. Last year, you had mentioned that the PSU stocks will outperform. Also, he's saying he trusted your opinion. You also gave that big, bold statement that Bank of Maharashtra is the next HDFC bank when it comes to the performance of the bank in particular, operations-wise. So he's saying that he has actually now made a basket of PSU banking stocks, in which he has Bank of Maharashtra, he has UCO Bank, he also has Central Bank, IOB, Indian Bank, and and PSU Bank Bs. So he's holding about 1 lakh shares each in these counters at much lower levels. So he wants to know now, should he actually stay put with this entire PSU basket going ahead, or do you expect similar performance to continue or some headwinds? He's also mentioned the fact he booked some partial profits as well.
Few insight which I learned from the market in 30 years, PSU banks and PSU stocks, invariably in the last 33 years, the rally comes and then they crash. It happened all the time. There was no exception. Now also, I firmly believe that there will be a correction because the liquidity in the system is limited. Let us not forget the fact that 338 lakh crore of market cap. Tomorrow, if investor demand even 3 lakh crore overnight, the money is not there. So this is what plays out ultimately. But at the same time, what I want to tell you is that among all the banks he has mentioned, he should always stick to only the quality banks, because the POC bank as a whole, their performance is operational performance is not uniform. So among the banks he has mentioned, Bank of Maharashtra, Indian Bank, they are a class apart. And as he also said, Bank of Maharashtra is similar to HDFC, not in terms of stock price, but in terms of quality of performance parameters. So these are the two banks worth holding. But then he can always, partly, tilt towards cash call and large cap call. But otherwise, Bank of Maharashtra, if somebody wants to hold for 5 to 10 years, I think it may be a phenomenal stock.
Okay, moving on then. And Kunal, the next query is coming from Neha from Bangalore. She is a short to medium term investor and looking to invest rupees 2 lakh each in one hotel stock and one hospital stock with a time horizon of next 2 to 6 months. What she's saying, she already has stocks like Lemon Tree and Apollo Hospitals in her portfolio. So any stock amongst in these two sectors on your radar?
So I think if you're looking at specific two pockets, that is hotels as well as hospitals, and I would believe Oriental Hotels is something which you can look out for. The stock is currently at 114, but I think a better buying price could be closer to 110 mark for the stock, and you can probably expect a target of 120-25 for the stock in that kind of time span. From the hospital space, I think Fortis is another name which looks attractive. The stock is almost at 380-385 levels, good zone where you can look to buy as well as hold on for a target of approximately 420 to 450 levels.
All right. The next query is coming in from Ramamurthy from Bahrain. And Kunal, I think this one is for you. Yes, it's for you. He's asking if it's a good time to buy Tata Elxsi as well as Akzo Nobel. If possible, will you be able to talk about KPR Mills and Vardhaman Textile as well? But yes, firstly, Tata Elxsi and Akzo Nobel, do you think makes sense to buy right now?
Yeah, I think it makes sense to buy Tata Elxsi at current levels of 8,300 approximately. I think we were highlighting this last week. And was mentioning that the stock could probably try and come back to that 10,000 mark as well, possibly in the next maybe 6 to 18 months or so. Akzo Nobel, on the other hand, the stock has gone through a sharp correction. I think from 2,800, 2,850 mark to now 2,450, 475 where the stock is trading. So it could be a good starting point where you may look to start averaging at current levels, but then wait out for a point when the momentum builds up. That's the point where you can look to buy. And from the other two names which you mentioned, KPR Mill is something which I do track. I think it's a good stock to buy on dips at current levels, as well as maybe if the stock corrects back towards 800, 820 mark.
Okay, Mr. Chokalingam, the next query is from V. Mathur. He's a senior citizen from Delhi and a long-term investor, already holding shares of Dabur India, 820 in quantity from a price of 543 rupees. Wants to stay invested for the next 2 years. What to do in this one? Good to hold on. Any targets on the same?
suggesting ITC, better dividend yield, and also there is some growth in some of the segments always. Of late, our India is not able to post strong growth, business growth. So therefore, I would suggest buying ITC and selling our India.
All right. This one is coming in from PVN Rao. This one is for you, Mr. Chokalingam. He wants to know about Datamatics Global. He wants to know whether he can invest at in this counter right now at the current price for a period of at least 5 years.
5 years back, I recommended it at 60 rupees. Then it became 30 rupees. So after going through tremendous stress, now at 761, I cannot recommend. I think it doesn't deserve this kind of price. Let us understand that it's a massive, mega bull market. It's a mother of all small cap bull market we have seen. It's not sustainable. I may be wrong. It's not sustainable. So at the price, I would never recommend buying this stock.
Okay, that's the take on Datamatics Global. But for this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries. So stay tuned.
Welcome back. You're watching a Buy Now Sell Now on ET Now, and let's just mark the flash on the bottom of your screen. You have Bitcoin that's surpassed the $41,000 mark. It's hit a 19-month high, and not just Bitcoin that is seeing a rally. You've seen it actually gold also, spot gold prices also hit a fresh record high levels. It surpassed the $2,100 per ounce mark. And Kunal, coming to you, let's talk about the Indian gold prices as well, right? We've seen that surpass 64,000, I think, is what has scaled new record for gold in Indian markets as well.
Well, yeah, I think it's a global bull market which is actually shaping up, where many of the risk-on asset classes are actually performing very well. So I think if you look at the holistic perspective, US equities, the European markets, you've seen many of the emerging markets, even Japan, I think, has come back towards a major multi-decade high, or I think it's coming closer to those kind of levels. You've seen good recovery across many of the Asian indices. And then from the bullions, gold, silver has done they've done exceptionally well in the last 2 months, and no surprises that even Bitcoin has managed to rise up from that 23,000, 26,000 mark.
Right. If you had actually watched Buy Now Sell Now towards the start of the year, you would have known that Kunal was pretty bullish on gold in particular, MCX gold in particular, and I believe the target around 70,000, Kunal?
Well, yes, 70,000 in rupee terms is where I'd mentioned the targets for gold. But I think even at current levels, I would be bullish on the asset class. And in fact, from here on, I think silver could be the other asset class which could start performing exceptionally well.
All right, so all that glitters is definitely gold at this point in time. You can add silver also and maybe Bitcoin also to that. But let's move on then and let's continue taking your query. And this one's come from Alex. He's writing to us from Pune, and he has CIE Automotive. He purchased at the levels of around 499 rupees per share, Kunal. He wants to know whether for the short term, how are the charts looking for this? And his short term is 1 to 2 months.
So I think it's CIE India, if I'm not wrong, trading at 490 odd levels. Looks attractive. In fact, the stock is perched at a breakout of a downward sloping wedge, which I believe could be an interesting pattern for the stock over the near term. I would suggest to hold on to the stock if you've already bought. If you're looking to buy, good levels where you can start entering the stock.
Okay, Kunal, once again coming to you, because this query is from Dr. Seema, and she's saying that between NTPC as well as GAIL, which would you recommend for a better growth? I'm asking you because you have been flagging these counters on the technical front. Dr. Seema wants to stay invested for the next 1 year.
A tough one to choose between two of them, but I believe on the basis of the recent breakout, GAIL could be something which could find some good momentum. The stock is already at 140 plus levels. So purely on the back of this last 1 week of momentum in the recent breakout, I would try and give it slight more edge as compared to NTPC. But as I said, it's very, very difficult to try and pick and choose and say with high level of conviction that one stock could outperform. But I think GAIL looks to be on the short term time frame charts a lot more attractively.
All right, this one is coming in from Satya, and for the last 2 weeks we did not take his queries. Apologies for that, Satya, but a lot of queries are pouring in. Try to take as many as possible. He's looking to invest actually in 3 counters, and he wants to know which one will offer him best value as well as growth perspectives. And Mr. Chokalingam, this one is for you. One is Pitti Engineering, the other one is Bombay Burma Trading Corporation, and the other one is Texmo Pipes. I'm unsure which one that is, but these are the three counters that he's looking to invest in. Which one do you think will give him good growth prospects going ahead?
This is not a growth stock. This is a deep value stock. It holds for every single share of Bombay Burma, it holds 8,000 rupees worth of Britannia share. It's about 87% discount. This is the maximum holding discount this company has. Now the time has come for this holding discount to narrow down. One, they mentioned that they are not going to invest in Goya, and two, Wallace Brothers, they were one of the original promoters of Bombay Burma more than 100 years back. They were classified as a public shareholder. Recently, in September quarter, they were classified as a promoter. So that gives me a lot of confidence. Somebody from UK becoming a part of promoter group is very helpful for retail investors. I believe, I may be wrong, that the governance issue would be much better when somebody like with 100 years of experience in running the company becoming a promoter. And also the Britannia is doing very well, where Bombay Burma has got 50.5% stake. So I believe, I may be wrong, it is only for risk-taking investors. I believe Bombay Burma can double or triple or even 4 times in a matter of 3 to 6, 7 years.
Okay, moving on then, and this query is coming in on IGL. Kunal, Govinda AP is holding 200 shares of IGL from a price of 460 rupees. A decent day coming in for IGL and finally seem to be coming over that long downtrend. So good to hold on, or do you believe that the momentum could be for a shorter time and he should exit at this point?
Yeah, I would believe that it could be just a short-lived momentum. So I think any exit which you get closer to your cost price or maybe in good kind of profits over the very short term, I think that could be taken as a good zone where you can look to exit the stock and move on towards quality large cap names.
Okay, this was from Balan. Kunal, this one is for you. He has Sheila Foams. He's making 5% loss in that one. He has SBI Live where he's making a loss of about 20%, or maybe he's making a profit. I think it's a profit that he's mentioned, profit of around 20%. Now he wants to know whether he should exit both of these counters and look at large caps like Kotak, Infosys and ICICI Bank.
Well, it's a tough one because Sheila Foam as well as I think the second name which you mentioned was SBI Life. I think both of them are at a turning point for themselves in terms of the current chart structure. But yeah, I think on the other hand, you also have large cap stocks like ICICI Bank, HDFC Bank, etc., SBI, which are looking very attractive to me on the charts from the current level. So it's a very tough one. I would probably place that if suggest that if you can place some extra capital and then look out for investing in the larger cap names, that could be a better strategy rather than exiting these stocks and then shifting on to those names.
Okay, Mr. Chokalingam, the next query is from Katir from Bangalore. He has bought shares of Paradeep Phosphates, holding 1,000 shares at a price of 65 rupees each and wants to continue holding it for the next 3 years. So what's the outlook for long term, as well as can he buy more at this point in time?
I would not suggest this kind of fertilizer stock for long term. A, the non-fertilizer is coming, which is going to be much cheaper, and B, the fertilizer subsidy is going to shoot up. There is a shortage of fertilizer in regions like Africa and all. And three, you have next year election. So if subsidy burden increases, I believe, logically speaking, only the fertilizer companies would be impacted. Neither government nor public can take the extra burden. So therefore, maybe for short term, you can hold, but I am not in holding this stock for the long term.
All right. The next one is coming from Pradeep Kumar. City Union Bank, Kunal, 1,000 shares at a price of 150 rupees per share for the next 2 months. How is it looking on the charts?
Very attractive, but the only concern with City Union Bank is that sudden pause the stock takes after a decent rally. So I think in the last 1 or 2 months, the rally has been quite strong for the stock. I was actually expecting the stock to be somewhere closer to 165, 170 plus by current levels, but it seems like the stock has this tendency of going into a prolonged bit of a pause. So you may either have to shorten your time, you have to shorten your targets for the stock, or maybe increase your time horizon. But I think closer to 170, 175 is where could be a potential target for City Union Bank.
Okay, Mr. Chokalingam, the next query is from RS Mundada from Pune, holding 5,000 shares of Trident at a price of 40 rupees. What's the outlook on this one? And he also has another query on NHPC. Can he buy NHPC at this point in time? What's your view?
I would not buy most of the PSU stocks other than the banks, select banks. They already rallied. I believe that time is ripe for some correction. And second, Trident, I would not recommend. It's a cyclical business, and now the business cycle is not in favor of this particular industry. So I would not buy.
All right, with that, let's kickstart with the rapid fire then. And this one is coming for you, Kunal, for Bank of Baroda. 192 December futures is what Anjali has bought it. At what price she should move out?
Short-term trade, I think you should look to book out at current levels.
Kunal, Mohit has got 500 shares of NMDC at a price of 136 rupees. His time horizon is for the next 2 years. What's the outlook?
Definitely a hold.
All right, this one is coming in from Sri Krishna from Hyderabad. He has NBCC 800 shares at a price of 90 rupees per share. Do you think it's right time to average this particular counter or stay for some more while for this one, Mr. Chokalingam?
One should sell this at this price.
Okay, Kunal, what's your view on Sona Comstar? Pradeep Kumar has bought 88 shares since the time of IPO and wants to know what's the outlook. Good to hold or book out?
Hold on, but keep a stop loss of 550 if you're a short-term trader.
All right, this one is coming in from another viewer whose name is Satya, and he's making 100% profit when it comes to New India Assurance as well as Birla Soft. Should he stay put with this for the long term or book profits right now, Mr. Chokalingam?
Certainly, you should book profit in Birla Soft. Valuation is stretched. Maybe New India Assurance you can hold for long term.
Mr. Chokalingam, what's your view on Bajaj Consumer Care? V. Ravichandran holding 500 shares at a price of 160 rupees. Can he go ahead and invest further? His investment horizon is for the next 3 years.
If he is trapped and losing money, he can hold, but I would not advise buying more at this price.
All right, Monish from Bangalore wants to know about Ward Wizard. Kunal, 59 is a buy price, 2,000 shares he can hold for the next 1 month. He wants to know whether he should look to exit Ward Wizard.
I don't track the stock.
All right.
Mr. Chokalingam, what's your view on SEPC? Parvinder Singh holding 125 shares at a price of 17 rupees 30%.
I'm sorry, I have never tracked this company.
All right, SV Venkateshwaran wants to know about a long-term bet for the next 5 years. Your top bet, Mr. Chokalingam, that he can look at investing?
Yeah, one is Bombay Burma, and second Indoco Remedies, and third KCP Limited. I believe KCP Limited will be a multi-bagger. It has got 43 lakh ton of cement and limestone mining rights for 30 years. Apart from that, it's a highly profitable cement sugar business in Vietnam. Extraordinarily deep value stock. I think in 3 to 5 years, this stock can multiply. I personally hold this stock.
Okay, so those are the top recommendations from Mr. Chokalingam, but it's time's up on the rapid fire session as well as on the Buy Now Sell Now show. Thank you so much, Kunal and Mr. Chokalingam, for joining us today and helping all our viewers resolve their stock-related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action ahead.